All right, welcome back to Bazaar Morning Call. We have a full session of trade today and we have a full list of stocks to talk about. So let's get straight to it. First up, of course, Reliance will be in focus and you're seeing a lot of the brokerage commentary on your screen. But in the meantime, let me just take you through the key numbers. Now, this time around, there was growth across key operating businesses. The oil to chemicals business was under a bit of pressure, but that's also because of a planned maintenance shutdown. The consumer-facing businesses of Reliance is doing very well this time around. So if you look at the retail business, it was a stellar growth over there. The retail business EBITDA was up 31% year-on-year. Oil and gas posted its highest ever quarterly EBITDA this time. KG-D6 is now contributing to 30%, by the way, of India's gas production. Jio business was quite steady on all parameters. Revenue growth was 2.5% quarter-on-quarter. There was strong subscriber addition and that's what drove the top-line growth as well. The EBITDA margins for Jio have been stable for the last 5 quarters at 52.4%, and the ARPUs increased 2% year-on-year, almost at 182 rupees because of a better subscriber mix. The subscriber base as well has inched up higher to 470 million. So the consolidated numbers will come up for you on your screen. Largely a stable set of numbers, you'd have to say. The EBITDA margins have improved quarter-on-quarter. And as I said, the oil to chemical business was impacted because of the planned maintenance shutdown. But standard disclaimer, Reliance Industries is the owner of the channel that you're watching and will be reacting to their numbers today.
Okay, all right. Well, that one has been holding one end up. So let's see how that goes. But Mangalam joins in as well. And when, we introduced everyone, Mangalam, you were looking the most upset. But maybe you had a big plan on Saturday, but HUL's numbers were more disappointing, I think.
Well, yeah, I was looking forward to the rest, actually, post HUL and Reliance numbers. But tell you what, HUL numbers have been weak. They've been weak for the last 4 quarters. And this time around as well, not much was expected, but the company disappointed on that as well. Revenues shy of that 15,200 crore mark. The street was working with a number closer to 15,400 crore. EBITDA 3540 crores. The street was working again with a number of 3,700 crores. As a result of which the net profit was below expectations as well. Volume growth at 2% was in line with measly expectations of 2 to 3% as well. Gross margins, they improved by 400 basis points. But there was no improvement in the EBITDA margin because the company increased their ad spends by about 260 basis points. Across all their segments, be it home care, beauty and personal care, revenues declined by about 1%, whereas we saw a 1% increase in food and refreshments itself. The management said the environment is challenging. They are navigating through this. And the couple of parameters that they'll be watching out for is rural income growth and how winter crop yields come out for them to decide whether there is some recovery in rural India or not. But for now, expect the stock to be in the red. It has been an underperformer, may continue to underperform until macro challenges are away.
All right. Mangalam, thanks very much for that. We'll, of course, play out Mangalam's chat with the HUL management a little later here on the program as well. But let's move on and talk about RBL Bank. Abhishek is here with details on this one. Abhishek, morning.
Morning, Prashant. So, RBL Bank numbers on slippages actually disappointed. Slippages were at 666 crore, which is up more than 23% quarter-on-quarter. The annualized slippage ratio has now crossed the 3% level, 3.33 versus 2.84% in the previous quarter. Now, gross NPA and value-wise rose by more than 4%. However, in terms of percentage, gross NPA ratio has remained flat on a sequential basis owing to loan growth. Net interest margin was at 5.52% versus 5.54%. So that's another good point to take away. In terms of the performance versus our poll, the NII was in line with our poll. However, on account of one-off provision that they made with respect to AIF of about rupees 115 crores, the PAT came in below our poll. Back to you.
Okay, thanks a lot, Abhishek, for that. Well, Paytm also came out with its numbers. How did it look this time?
Well, Sonia, EBITDA improvement continued. Loans have declined on a sequential basis, which is a negative surprise. Total income was up 40% YOY and about 12.6% sequentially. The EBITDA, that increased by 7x on a YOY basis due to small base or lower base in last year, same quarter. And sequentially, it improved by 43% on a sequential basis. Contribution profit margin, that declined sharply sequentially to 53.3 versus 56.6% in the previous previous quarter. Net loss that continued to narrow down. It is now at 222 crores versus 392 crore on a YY basis and about 292 crore on a sequential basis. The gross merchandise value that's increased by more than 25% YY and about 7.7% sequentially. The value of loan disbursed that declined sequentially by 4.3%. Number of loans also declined sequentially by 12.9%. Back to you.
Okay, all right, Abhishek, and you've got a busy day with the other banking names as well that will be coming out, so we look forward to your analysis later on. But I'm looking at Tata Steel. Well, yesterday they announced, their plans with regard to the UK operations, and it's a step in the right direction, so I expect the stock to react positively. Now, they're saying that they'll commence statutory consultation as part of its plan to transform the UK business that they've already announced. Now, they've given a couple of numbers now. Up to 2,800 employees will be affected owing to this, and they propose to commit in excess of 130 million euros as a support package for these affected employees. The UK government, remember, had already committed up to around 500 million pounds to enable the transformation, and they are committing. Tata Steel has already committed around 750. So that's pretty good news. So expecting basically the step in the right direction. So expect the stock to react positively. Yesterday it ended high with a gain of around 2.5%. But let's hop across to Ekta. Ekta, tell us about Fortis.
Well, yes, I expect Fortis to probably show some amount of negative reaction today because Agilus Diagnostics, which is basically their subsidiary in the diagnostic space, has received a notice on Jan 18th from the anti-corruption branch of Delhi. This is in respect to the alleged anomalies in diagnostic tests conducted in the Aam Aadmi Mohalla clinic, and they have sought certain documents and information from Agilus. Agilus has indicated that they've rendered services worth around 20.4 crores as of December 31st, 2023. The services are less than 2% of their consolidated revenue, and as of date, Agilus has only received a sum of around 3.3 crores from the Directorate General of Health Services of the Delhi government. Agilus continue to provide services in interest of the public at large. They sent various notices to the DGHS requesting release of outstanding payment of pending dues, and they have indicated that they just picked up samples, tested, carried out billing and reporting within the agreement. So I expect the reaction to probably be very limited for Fortis simply because the financial impact is very limited of this.
All right. Thanks a lot for that, Ekta. That's on Fortis Healthcare. But we also have Sunteck Realty that you should be watching today. Sonal is here to tell us the latest on that. Sonal, over to you.
Good morning, Sonia. Well, usually for real estate companies, we have to look at the pre-sales and volumes. But surprisingly, this time, they have not given it in the presentation yet. The presentation is not out after their numbers. So we do have the P&L where it looks like their revenues are down 52%. It is an EBITDA loss of 15.6 crore rupees versus an EBITDA of 18 crore rupees. They have a loss this time of 9 crores versus profit of 2 crores. But it is not entirely the way we should be looking at real estate companies. So we'll await investor presentation details where they will be giving the launches, the pipeline and the operation update for the quarter as well.
Okay, all right. Sonal, thanks very much for that. Let's move across and talk about Tejas Networks. Rima is here with details on this one. Rima.
Hi, good morning. So Tejas Networks has reported very strong revenue growth, but EBITDA losses for the company have expanded. So the company's top line growth stands at 41% quarter on quarter, and year on year, it's a growth of more than 100%. If you remember, recently the company had won a very large BSNL deal. So as the company executes on this BSNL deal, they are procuring a lot of components, they're investing in R&D, and that's the reason why the EBITDA for the company this time has come in as a loss of 7.5 crore, and even at the bottom line there is a loss of about 45 crore. The company has said that there is increased inventory that they are sitting on. As I said, it's maybe largely on account of procuring all the equipments which is required to execute the large BSNL order, and the order book for the company is in excess of 9,000 crore rupees. So the inventory this quarter stands at 2,683 crores. Back to you.
Okay, all right. Thanks a lot for that, Rima. Well, let's go back to Sonal. She's here to tell us about CESC. Sonal?
Well, for CESC, the numbers look decent on a sequential basis. There was a revenue growth of 2%. EBITDA grew 5% to come in at 963 crore rupees. However, profits were down 10% because of some level of higher expenses by the company as well. But the generation volumes, they were good. They were up 28% to come in at 1,535 million units. So that worked well for the company. So expect the stock to be in the green.
All right, Sonal, thanks a lot for that. Well, Credit Access Grameen also came out with its numbers yesterday post-market hours. Let's find out how it looked. Abhishek is here with the fine print. Abhishek, over to you.
Well, Sonia, amongst lenders, microfinance seems to be the painful portfolio in Q3 FY24 with asset quality deteriorating across pan-India, like Tamil Nadu floods impacting the book of some of the lenders. This time, for Credit Access Grameen, the western part of India has actually impacted the asset quality. Gross NPA value-wise has increased more than 32.5% sequentially. The NII growth remained healthy at 48.5% YOY and more than 5% sequentially. Provisions were up 31.7% quarter-on-quarter due to deterioration in asset quality. PAT has increased by 63% YOY and by just 1.2% on a sequential basis. Disbursals remain tepid in terms of YOY performance, growing at just 10% YOY. However, sequential growth in disbursals were strong at about 7.5%. AUM growth remained healthy at 31.5% YOY and about 4% sequentially. So expect a red tick on the stock today on account of, the deterioration in asset quality that you have seen. Back to you.
Got it. All right. Thanks a lot for that. Thanks to our entire team, actually, for giving us all of the data this morning. Here's a quick recap of our top stocks. Stocks with positive news flow. There's Reliance, Paytm, Tata Steel and CESC. While stocks with negative news flow, HUL, RBL Bank, Fortis Healthcare, Sunteck, Realty, Tejas Networks and Credit Access Grameen. Take a quick break. On the other side, Prakash Diwan will be with us to give us some fundamental stock analysis. We have lots to discuss, so don't go anywhere.